Hello, it's Connie from Prosperity Finance, sharing the best financial tips so that you can be more successful with achieving your financial goals. Now, what I'm going to cover this week, I think is really important. Now, you probably recall from the 1st May this year, Reserve Bank has removed the LVR restriction for the banks. Therefore, banks can make their own policy in terms of LVR for family home and investment property. Now, a lot of people thought the bank wouldn't have LVR requirements, but it's actually not the case. So, by having no restriction from Reserve Bank doesn't mean they have no LVR rule on the borrowers. So, it still have LVR. It's a way to help the bank minimize their risk. However, the good news is there are some banks already increased the LVR for investment property loan from original 70% to 80%. Not every bank has done that. We've noticed about 3 banks already take the move, include ANZ, ASB and Kiwibank. Now, there's other banks out there still applying 70%. My own opinion is they will catch up very soon. So probably in a short period of time, every bank probably doing 80% on investment property loan. So that's good news for investors if you are investors. I think there's 2 implications. Number 1, that means you only need 20% deposit. Now, the 20% deposit either come from your cash or existing equity from your existing properties, as opposed to have a 30%. Is a big ask for a lot of us. Hard to save 30% deposit, and also the property has not gone up significantly over the last couple of years, so really hard to get 30%. But 20 may be achievable. So that's one implication. It's really positive. Second positive, a lot of people not aware, is the LVR restriction only valid for 12 months. So that means by May next year, 2021, Reserve Bank will review the LVR rule and maybe they reapply the LVR rule on investment property at 70%. So that means probably can lose a lot of unused equity from 80 to 70. So how are we going to keep that? Make sure that we take the opportunity that we have right now until May next year. That's why I want to spend a bit of time in this video to explain this point so that you can grasp this opportunity before it's gone. Okay, so I've made it up a case study. So let's assume you have 2 properties. One is family home and one is rental property. Now let's say your family home worth $1 million and you currently have $400K against this property. Now we all know as a family home, the bank happy to lend on 80% LVR. So 80% of $1 million, $800K, and you already borrow $400K. So the unused equity is $400K. Now let's look at the rental property. Let's say the market value is $900K. You have a loan of $600K. Now currently, if the LVR is 70%, then the equity would be $630K, right? And you already have $600K, so your unused equity is $30K. Now you have together about $430K unused equity. Now let's say your bank is happy to lend you 80% LVR on your rental property. So what does it mean to the unutilized equity? Now, that will mean your unused equity increased to 120K. Now, the difference between the two is 90K. Now, let's assume the bank requires 30% deposit. 90K additional equity means your budget would increase by 300K because you will need 30% deposit, 300K additional budget multiplied by 30% is 90K. If you don't do anything, but by May next year, the Reserve Bank reimposed the LVR rule back to 70%. You suddenly lost 90K utilized equity, and that means you lost a budget of 300K. So that's so significant. So that's why I think it's very important for me to point it out, and we can start planning for the next step. Right. So What we need to do then, you probably are in one of the two situations. Now, one of the situations is your home and rental are separate at the moment, and the other scenario is they probably are mortgaged to the same banks. But either scenario, we will have a solution for you. So let's start with different banks. Let's say your home and rental are mortgaged to different banks. Now, what you could do is you top up your loan to 80% LVR. So in this case, you top up 120K, right? And the purpose of that is to repay the loan that has a home as a mortgage. So your loan will reduce to 280K here. So let's say next year, the LVR is back to 70% and you are on 80% LVR, that's fine. As long as you keep paying the loan, the bank won't ask you to repay that 120K, right? And you already separate them. So all your equity are sit with this bank. So that's nice, really nice, right? So you don't have to worry about that LVR change back to 70%. So that's for the two property with the different banks. Now, if they are together in the same bank, cross-secure each other, we can still separate them by refinancing one of the properties. It doesn't matter which one to go. It's more about, when I make a recommendation which one to go, which one to be refinanced, there's a number of factors we need to take into account. For example, when you borrow the money, you get cash back from the bank, and the bank has a strain, which means if you leave the bank within 3 or 4 years, depend which bank you bank with, then they will claim some cash back. So that's about that. And also other factors like which bank is suitable for holding home, which bank suitable for holding rental. So I have to look at your individual case and then give you a bit of advice in terms of which property need to be refinanced. But the principle is the rental need to be in a separate bank. Can't be with the same bank as the home. And the rental property bank need to keep 80% LVR. That way, you achieve the same thing, which is lock the maximum equity here, right? So either way, we can do it. Now, in terms of timing, when should we do that? I think we need to review immediately so that we can start planning, right? But doesn't mean you need to do anything straight away because we still got some time until first May next year. So we got about 10 months to take action. Probably the application need to be done at the time of your loan coming off fixed term or when the cashback clause is expired, so that you don't have unnecessary costs involved. So we can start doing the planning now, and then we'll talk about when is the best time to take action. So that you get the benefit and minimize the downside, which is the unnecessary cost. So we can, take advantage not only, for the future borrowing, but also how we can, max out the opportunity that we have right now. So thank you for watching. If you find it really useful, please feel free to share with your family and friends so that they can benefit from this as well. Thank you so much. I will see you next time. Bye for now.